crude pops over $62 as it saw a drawdown for the first time in 17 weeks and actually beat analyst expectations. Zook, if you take a look at the 5-day chart, though, $9 a barrel in just 5 sessions, that seems to be pretty extreme, though.
Well, even from the low to the high now of close to 40 and well over 60 is almost a 50% up move from the bottom. So just in terms of percentages, it's quite a move. And yes, $9 in a short period of time rather caught the shorts pretty good here. May even have gotten some people a little long up above 60. Just from an intellectual point, no other reason other than a lot of the fundamentals are fairly in place. I'm getting just a little antsy. I want to sell it between 62 and 65 and see what happens.
But in terms of fundamentals, is it because of summer driving demand, or is it because refineries need the crude now to keep up with that drawdown?
Well, certainly a number that people have been watching now are rig reductions and the little bit of issue in Libya, and so you know it's certainly been the last couple of days. But overall, when we did get over 50 and people started piling in on the short side between 50 and 55, they've all run for cover over 57, and that pushed us through 60. I think it's much more positioning than anything fundamental.
Well, it's interesting that you were saying with the rig counts, once those all start to come back online, production is going to shoot even higher, and then we're kind of back to the supply glut that we saw in the beginning of the year.
Well, even with Iran ramping up production, there was a report earlier about Iraq coming on stream much higher than earlier estimates. So we will be seeing fundamentals take over again, and the glut of oil is not going away. It's basically on the margin that million or so barrels per day that comes and goes that is going to be the driving factor.
All right. As always, thanks very much, Zook.
My pleasure.
For TheStreet in New York, I'm Jill Malandrino.